It's been another interesting week for Coinbase. Shares are starting to slide after a massive run up over the past year. So that's not necessarily all that surprising, but the company continues to move forward and actually improving its financials and developing real use cases for the blockchain and for its app and business. And that's really what I want to cover today is some of the fundamental improvements. One, it was a debt offering that the company announced it's going to potentially buy back a significant amount of debt that is already outstanding. I think the terms were pretty reasonable. And I don't know that Coinbase necessarily needed the cash, but we'll see what they do with that money over the next year or two, because it's very possible that they're going to start making acquisitions that make sense to bolt onto the company. But the other piece is Coinbase trying to position itself as a player in artificial intelligence. And this is one of the things that potentially makes a lot of sense in the blockchain. As artificial intelligence proliferates and everything from text to images to videos becomes easier and easier to make, it's going to be harder to decipher what's real and what's not. I mean, that's really the downside of artificial intelligence is there's going to be an abundance of contents. So one way to ensure that you're reading something that is written by somebody who you trust or is a real video that you intended to watch is to make sure that it is verified on the blockchain. The blockchain really creates scarcity in a world of abundance because you actually know what the asset that you're looking at and what that is pointing to. So I want to go through how they're at least positioning themselves, how this could potentially be a really interesting play for Coinbase. I don't know if this is going to be a financial driver for the company over the next couple of years, but if there is a need for something like blockchain use with artificial intelligence, that could be another piece of optionality for the company. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's first go through the debt offering. Here's the debt offering, announced a $1.1 billion 0.25% convertible note due in 2030. So a lot of words there, but basically what this means is they're raising about $1.1 billion, could potentially be $1.24 billion if original purchasers exercise what's known as an over allotment. Basically, is there so much demand that they could potentially sell more for the same price? That is what that is about. So could potentially raise that much money, and this would be convertible, and this would come with a 0.25% coupon, very, very low interest rate, but then would be convertible to stock at a conversion price of about $333.54 per share. As I'm recording, shares are trading for about $233.67 per share. So pretty good offering from the convertible standpoint. They will also enter into what's called a capped call. And what that is just basically buying options so that you don't dilute shareholders. What they're doing is they're seeing this as a less expensive way to raise debt than to just include a higher coupon rate and not include this capped call. So there's a bunch of different options that you have when you're raising debt. And this is the direction that Coinbase has chosen to go. What they're going to do with this cash is they kind of leave this open-ended, but in this section right here, they say they intend to use the proceeds from the offering to repay at maturity or repurchase or redeem prior to maturity debt, which includes the 0.5% convertible notes due in 2026, 3.375% convertible notes or senior notes due in 2028, or 3.625 senior notes due in 2031. So the reason that you would repay those is that they're a little bit higher interest rate. I know that over the last year or so, those have traded at a discount because they were seen as higher risk. That discount is likely dissipated, but if Coinbase can buy that back at a discount, that would be a good use of capital in this case. So interesting move for Coinbase. And like I said, it will be interesting to see how they use this capital, because I think this is a company that's going to probably be cash flow positive, at least early in 2024, given the recovery in crypto exchanges. But obviously they see the need to push out some of their debt maturities, which is just a conservative move by management right now. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The other note that they put out recently that I thought was really interesting is an argument for blockchain being used in artificial intelligence. And this is something that I think that people have been talking about for quite a while. It's not a huge surprise that Coinbase is making this argument, but I wanted to go through exactly what they're seeing and the reasons that the blockchain could be important for artificial intelligence. So they talk about data security, helps store data in tamper-proof and immutable manner. Immutable just means that you can't change something on the blockchain. So there are NFTs, for example, that are immutable. You can't change a CryptoPunk, whereas you can change some NFTs that are mutable, where it's just pointing to an image somewhere. So there are ways to do this in an immutable manner. Data provenance, traceability, and accountability. So who actually owns something, who created it. That could be a potentially valuable use case for the blockchain and artificial intelligence. Decentralized decision-making, autonomous, transparent code execution. So this would be smart contracts on the blockchain. Decentralized identities. So maybe you don't want to know who is accessing or creating a piece of artificial intelligence. So you have the ability to do that on the blockchain. And then micropayments. And this is something I think a lot of people have been bullish on for the blockchain for a very long time, is just being able to make small payments and interact with a smart contract. And that may make sense with something like artificial intelligence. The other thing that they talk about here is the AI ecosystem. And so I think this image is interesting. You have data owners, data integrators, and annotators. Model developers need to access that data. So the blockchain could be a place for them to do that. That potentially creates a payment method. So let's say that I have articles that I allow somebody to help build their model. If they're going to pay me for that, this would be a case where a microtransaction would make sense. Maybe they're accessing the work of thousands and thousands of creators, spending a small amount of money on each, but this is a way to actually create that payment infrastructure. Then you have the compute providers. This would be companies like Microsoft or Google, who are actually like running models or inference in the cloud. You have the model owners and then the model user, the actual inference. And what the blockchain there could do is track trust and payments on the blockchain. So instead of a centralized company like Microsoft or OpenAI or Google doing this work, some of this could be done on the blockchain. So I think an interesting use case at the very least. And then they talked about the potential benefits and how they categorize them. And these are some of the same things that I talked about earlier, but really creating incentives that are aligned across the stakeholders in artificial intelligence and making sure that people know where the data is coming from for a model, know what the provenance of a given piece of output is. Again, there's not necessarily one certain use case, but this is where you build a piece of technology and then figure out how people are going to use it in the future. Your mind can kind of race with ideas, but one example would be if you had a newsletter or a YouTube channel, let's say, that was limited to a certain number of people and you sold a subscription, and that subscription could then be sold to other people because it's available on the blockchain. So it's not necessarily associated with an account the way that we would do it right now, but rather associated with an identifier on the blockchain, something like an NFT. And that would grant you access to the newsletter or to videos in the future if you held that NFT. Now that could be sold the first time by the creator, could be resold by people, and ultimately that could be a new subscription model. So if I want to make videos and make sure that you know that they're not created by artificial intelligence, then there would be a way to prove that on the blockchain. That's just one simple example, but I think it kind of shows where this may be headed. Is that in the future, if we don't know what's created by AI and what's not, once you find a trusted source, you're going to want to be able to continue to consume their content that is not AI, that either is or isn't AI generated, and find that verifiable on the blockchain. So interesting use case for Coinbase. Like I said, don't know exactly what the financial impact is going to be, but this is one of those optionality pieces that as they build out the technology, then companies and developers can build on top of it. So great use case for Coinbase, especially as they build out some of their identity solutions in things like the Coinbase app. But what do you think about the debt raise and the positioning as an AI company potentially? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.